What if I told you the biggest crypto crash in history wasn't just bad luck, but a perfectly timed collapse? In 2022, Bitcoin didn't just dip, it free fell. From nearly $69,000 to below $16,000. That's not a correction. That's a wipeout. Millions of people watched their portfolios bleed. Some lost years of savings, and some lost everything. Overnight, crypto geniuses disappeared, influencers went silent, and billion-dollar companies turned into dust. But here's the part that should scare you. This crash left behind clues, patterns, signals that smart investors study and beginners completely ignore. And right now, those same signals are quietly forming again. So the real question isn't, why did Bitcoin crash? The real question is, are we walking into the next big move or the next big disaster? In this video, we're going deep. No surface-level explanations, no hype. We'll uncover the real reason behind the 2022 crash, the hidden domino effect that destroyed crypto giants, and most importantly, what Bitcoin could do next in 2026. Stay with me till the end, because missing this could cost you more than just money. Let's go back to 2021, because this is where the story really begins. Everything felt unstoppable. Bitcoin was breaking records. Every week, a new all-time high. And suddenly, everyone was a crypto expert. Your friends were giving investment advice. Teenagers were turning a few dollars into thousands. Social media was filled with screenshots of insane profits. It looked like a once-in-a-lifetime opportunity. But here's the truth nobody wanted to hear. This wasn't a healthy bull run. It was a bubble. Why? Because the entire system was flooded with cheap money. During the pandemic, governments printed trillions. Interest rates were near zero. People had extra cash and nowhere to spend it. So they poured it into crypto, not because they understood it, but because they didn't want to miss out. This is called FOMO, fear of missing out, and FOMO is dangerous because when people invest based on emotion, they stop thinking logically. Prices rise faster than they should. Projects get overvalued, and risk gets ignored. So while it looked like easy money on the surface, underneath, the foundation was already cracking. Let's break the biggest misconception right now. Bitcoin crashed because crypto failed. No, Bitcoin crashed because the system around it started collapsing. And it began with one powerful shift. Interest rates killed crypto in 2022. Central banks flipped the switch. After years of printing money, they started tightening. Interest rates went up, fast. Suddenly, borrowing money became expensive. Free money? Gone. Big investors didn't want risky assets anymore. So what did they do? They pulled billions out of crypto. And when large institutions exit, markets don't fall slowly. They drop hard. 2. The Terra Luna collapse. Just when the market was already weak, a massive explosion happened. Terra Luna, once a $40 billion ecosystem, collapsed to nearly zero. Its stablecoin lost its peg. Panic spread instantly. People rushed to exit, but there was no way out. Billions vanished in days, and with that, trust in crypto took a massive hit. Fear replaced greed. 3. Celsius, Voyager, and Domino bankruptcies. Now came the domino effect. Platforms like Celsius and Voyager promised safe, high returns. But behind the scenes, they were taking huge risks. When prices dropped, their bets failed. They froze withdrawals, then filed for bankruptcy. Imagine logging into your account, and your money is just gone. That fear spread across the entire market. Everyone rushed to sell. 4. FTX, the final nail in the coffin. Then came the shock that broke everything. FTX, a giant exchange trusted by millions, collapsed almost overnight, not just because of market conditions, but because of misuse of customer funds. This wasn't just a crash, it was betrayal, and that's when confidence truly died. Bitcoin didn't just fall after that, it hit rock bottom. Here's the part most people completely miss. The 2022 crash wasn't chaos, it was a pattern. Markets don't move randomly. They move in cycles, again and again. And if you don't understand the cycle, You become the exit liquidity for someone who does. Every crypto cycle follows a similar path. First comes hype, new opportunities, exciting headlines. Then greed, everyone starts making money. Then euphoria, people believe prices will go up forever. And that's where most beginners buy, right at the top. Then suddenly, reality hits. Prices start falling. At first slowly, then violently. That's the collapse phase, what we saw in 2022. Fear spreads. Panic selling begins. People exit at a loss, just to save what's left. But here's the hidden truth. While retail investors are panicking, smart money is quietly buying. They don't chase hype. They wait for fear. They accumulate when prices are low and sell when emotions are high. That's the real game. So the question is, next time the cycle repeats, will you follow the crowd or will you follow the pattern? After every crash, something strange happens. Silence, no hype, no viral success stories, no one talking about becoming rich overnight. It feels like crypto is dead. But in reality, this is where the real game begins. This phase is called accumulation. Bitcoin stops making big moves. Prices move sideways, slowly, boringly. And that's exactly why most people lose interest. Retail investors leave the market. They're tired, frustrated, and afraid to lose more. But while the crowd disappears, smart money steps in, quietly. No headlines, no excitement. Large investors begin accumulating Bitcoin at lower prices. They don't rush. They don't chase pumps. They build positions slowly, over time. Because wealth is built in boredom, not in hype. During this phase, the market resets. Weak hands are gone. Strong hands remain. And slowly, confidence starts returning. Prices stabilize. Volatility decreases. It may not look exciting, but beneath the surface, the foundation for the next bull run is being built. And by the time the hype comes back, it's usually already too late to get in early. Now let's shift from the past to the future, because 2026 isn't random, it's part of the cycle. And if history even slightly repeats, something big could be coming. First, the Bitcoin halving effect. Every 4 years, the supply of new Bitcoin gets cut in half. Less supply, more scarcity, and when demand stays the same or increases, price usually moves up. This pattern has played out again and again, and the effects of the most recent halving are expected to fully unfold around 2025 to 2026. Second, institutional money. Big players are no longer ignoring crypto. Banks, hedge funds, even governments are stepping in. But here's the key difference. They don't buy during hype. They accumulate during fear, which means much of the groundwork is already being laid right now. Third, global uncertainty. Inflation, economic instability, weakening currencies. When trust in traditional systems drops, people look for alternatives. Bitcoin becomes that alternative. But here's the warning. It won't go up forever. There will be another crash, another fear phase, another opportunity. So the real question isn't, will Bitcoin rise? It's, will you recognize the cycle before it's too late? So now that you understand the cycle, let's talk about what actually matters. How do you win this game? Because crypto isn't just about timing the market. It's about controlling your behavior. Most people lose money for one simple reason. They follow emotions, not strategy. They buy when prices are high because everyone is excited. They sell when prices are low because everyone is scared. And that's exactly backwards. To win, you have to do the opposite. Buy when the market feels boring, when nobody is talking about crypto, when fear is everywhere. And hold, even when it's uncomfortable. Next, avoid the biggest trap, leverage. It looks tempting. Fast profits, bigger gains, but it can wipe you out in seconds. One wrong move, and your entire portfolio is gone. Also, don't blindly trust influencers. Just because someone sounds confident doesn't mean they're right. Always do your own research. And most importantly, think long-term. Wealth in crypto isn't built overnight. It's built by patience, discipline, and understanding the cycle. Because at the end of the day, the market doesn't reward the smartest. It rewards the most disciplined. So now you've seen the full picture. Why Bitcoin crashed in 2022, what really caused the chaos behind the scenes, and what could be coming next in 2026. But here's the truth most people ignore. The market doesn't repeat exactly, but it always rhymes. The same emotions, the same mistakes, the same cycle, over and over again. And every time, two types of people are created. Those who panic, follow the crowd, and lose money. And those who stay calm, understand the pattern, and position themselves early. So the real question is, when the next big move starts, will you chase it like everyone else, or will you already be ready? If this video opened your eyes even a little, make sure you hit that like button. Subscribe for more deep, no-hype breakdowns on money, crypto, and investing, and drop a comment below. Do you think Bitcoin will explode in 2026 or crash again? I read every comment, and remember this, in crypto and in life, it's not about being lucky, it's about being prepared when the opportunity comes. I'll see you in the next video.